So you're thinking about getting a HELOC to maybe pay off your mortgage faster, or maybe you already have one, but you're worried about the potential of your lender or bank shutting down your HELOC, freezing it, or maybe calling the entire loan due. If that's your worry and concern, here in this video, we're going to unpack what it means for your bank to shut it down, why they would even do it in the first place, what you can do to prevent that from happening, and what to do if it does happen to you. So let's dive right in. First, let's go and define what it means for a bank or lender to shut down your HELOC. Now, when I'm talking about freezing a HELOC, most people are referring to these three main scenarios. Scenario number one is an actual freeze on your line of credit, meaning the bank no longer allows you to make a draw or take money out of the line of credit until they can get more information about your finances or verify certain things. Scenario number two is that the bank calls the entire loan or line of credit balance due, meaning the bank is expecting you to make a full payment of the entire balance on the line of credit immediately. Scenario number three is when the bank reduces the limit of your line of credit. So for example, let's say you have a $100,000 limit on your line of credit, but the next day you find out that it's reduced to $50,000. That means $50,000 is now the maximum you're allowed to borrow at any given point moving forward. So those are the three main scenarios when people talk about freezing a line of credit. Now the question is, why would a bank do this? Now the bank has to have a specific reason as to why they're freezing or cutting your line of credit short, or even calling the entire loan due. Now in the case of your lender or bank freezing your line of credit or cutting the line short, it often has to do with a couple things. One is a decline in your property value. If the bank is able to substantiate the fact that the value of the property dropped, then yes, they can freeze your line of credit. Number two is a material change in your credit worthiness. So if you have collections or bankruptcies or foreclosures, then yes, the banks can, of course, freeze or shut down your HELOC. Now, of course, obviously, if you default or miss a payment on your line of credit, the bank can exercise the right to freeze your HELOC, preventing you from making any further draws, or they can cut your limit short. However, contrary to a lot of myths out there, banks and lenders can't just arbitrarily and for random reasons freeze your HELOC for no good reason. I mean, think about it from the bank's perspective. Why would they shut down a HELOC for a customer that's making on-time payments and they're making the money? That makes no sense whatsoever. Now, in all fairness, a sudden change in the market conditions could lead to a bank freezing or shutting down HELOCs. It could happen. But those situations have to be so catastrophic that your HELOC being frozen would probably be the least of your concerns. So in almost all cases, the bank has to give you a specific reason as to why they're shutting down your HELOC, freezing it, or even cutting the limit short. But what about calling the note due? Now, this contractual clause is pretty much standard, and it exists in both a mortgage contract and a line of credit contract as well. One of the most common scenarios where a bank will call your entire note due is that if there's a transfer of your property from one party to another. So if there's a change of ownership, then yes, the bank can call the entire note due. It's called due on sale clause. In other words, if you sell the property, the bank can call the note due, meaning they expect you to pay off the full balance of the loan immediately. So anytime there's a transfer of a property from your name to another person's name, the bank has the right to collect the entire balance payment immediately. Now, there is an exception to this rule, which comes from Garn St. Germain Depository Institution Act of 1982. According to this law, there are certain transfers that are exempt from the due on sales clause. Now, I'm not an attorney, this is not a legal advice, so please contact a licensed attorney to get more information about this law and how it might apply to you. But in scenarios like transferring your property to a living trust where you, the borrower, remain a beneficiary, or transferring it to a spouse or certain children, the law could exempt you from triggering the due on sale clause. So if you were to transfer the property to a living trust, then no, the bank may not trigger the due on sales clause, meaning you don't have to pay the entire loan due up front. So all that to say, as long as there's no significant decline in your property value, that you didn't lie to the bank, you're not turning your house into a drug lab, and you haven't defaulted, breached your contract, and there's no major changes to your financial situation like foreclosures, job loss, or household income loss, a freezing or shutdown of your HELOC is going to be very, very rare. But like all things in life, could it happen? Absolutely. Like, could I walk outside today and right now and get hit by a bus? Sure, it's possible. Could an asteroid hit the Earth tonight? Sure. Anything can happen, but it doesn't mean it's probable. And to give you some personal anecdote and perspective, after teaching the accelerated payoff strategy for nearly a decade, I've yet to see a single client lose or have their HELOC frozen or shut down. So all that said, here's how you can dramatically reduce the chance and the risk of your lender or bank shutting down and freezing your line of credit. Number one is to always make your HELOC payment on time. So if you're using the accelerated payoff strategy, this shouldn't be a problem because your income depositing into the line of credit will satisfy the monthly payment requirements automatically. Number two, work on reducing your debt balance. If you're highly leveraged, meaning you carry a lot of debt and you constantly max out your line, that can be a yellow flag for the bank. They might see it as a sign of financial distress, or they might suspect that you're running into some problems. So pay your balance down consistently and avoid sitting near your limit. Number three, keep a few months of expenses in reserve. Now, if it helps you sleep better, keep a few months worth of expenses set aside outside of your HELOC. That way, if it ever does freeze, you still have a cushion and a reserve to fall back on. Number four, this might be an obvious one, but keep your job, right? I know it sounds obvious, but your employment status matters. Of course, not having a job is a much bigger problem than a frozen HELOC, but it's still worth mentioning. So after all that, what should you do if your bank still freezes or shut down your HELOC? Well, first of all, don't panic. According to the Truth in Lending Act, the bank has 3 business days to provide documentation explaining why they froze or shut down your HELOC. In other words, they have to give you a specific reason. Now, in many cases, they may just give you the opportunity to appeal the decision and simply provide proof. So for example, if they mistakenly thought that you lost your job, you can simply send a proof of employment, like a page stub, a W-2, or even a letter from your employer stating and certifying the fact that you're still employed. You also have the right to request more information about what methods the bank used to come to their conclusion. So they can't just randomly shut down your HELOC and just guess that you lost your job, right? So if the bank or lender freezes your HELOC, remember, the money is still part of your equity. It's not gone, it's still yours. Meaning you can always apply for a new HELOC from a different bank and access the equity in a different way. Now, of course, the challenge comes if your financial situation has worse, like if you lost a job or your income went down, that might make reapplying definitely harder. But it doesn't mean that your money is forever gone, it's just part of your equity now. But if your finances are solid and the freeze was an error or just a precaution, you can reestablish a new HELOC elsewhere and regain access to your equity. Now, at the end of the day, if your HELOC is frozen or your limit is cut short, start by gathering information. Get the lender's notice. Find out why did it happen in the first place and the reason. And if you're still financially sound, like you still have a job, there's no issue, you can apply for a new HELOC with a different lender and gain access to the equity once again. Again, these situations are incredibly rare. But I know many of you guys are thinking about the what ifs, right? You want to prevent worst case scenarios, and that's smart. So from this video, I hope you now understand A, what does it mean for your bank or lender to shut down or freeze your HELOC? Why they might do it in the first place, how to reduce and mitigate the risk of your HELOC getting shut down, and what to do if it happens to you and how to respond properly so that you can get back on track using the home equity line of credit. Now, once again, guys, I just want to remind you that this video is for educational purposes only. And if you have specific concerns about your right as a consumer, definitely contact a qualified legal professional. Because if your HELOC was shut down or frozen without proper reason or explanation, or worse yet, if you feel like you were discriminated based on your skin, religion, creed, or even ethnicity, you have the right to file a complaint with the Consumer Financial Protection Bureau. You can let them know that if you believe you were discriminated against, or if the lender failed to follow the proper disclosure and the law and the rights that you have based on the Truth in Lending Act. So as we wrap up, the likelihood of your HELOC getting frozen, shut down, or cut is very, very low. It is incredibly rare. But can it happen? Yes. And my goal is to make sure that you're educated, you're prepared, and confident in knowing what to do and how to reduce the risk of your HELOC getting shut down. So friends, I hope this video helps. If you have any questions, drop them in the comments below and check out some of my other videos on how to pay off your mortgage faster using the accelerated payoff strategy.